Hey guys, it's Julie here with TipRanks, and today we're taking a look at 3 strong buy sports betting stocks. So let's get into it. All right, guys, welcome back. Thank you all so much for being here. Football season has officially kicked off, and next month we'll also have hockey and basketball starting up. And with sports comes sports betting. So I figured what better time than to look at some sports betting companies. Now, these companies are either facilitating or related to online sports gambling. So we're going to take a look at these companies, what it is that they do, and of course what those analysts are predicting for the stock's future. You can follow along with today's stocks over on the TipRanks website or by downloading the TipRanks mobile app. Links to download are in the description down below. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's get right into our 3 strong buy sports betting stocks. First up, we're taking a look at GENI Sports. They trade under the ticker GENI, currently priced at $7.66. In the past year, they've climbed over 17%, and in the last 6 months have gained over 29%. Now, GENI Sports is a tech company that is focused on collecting and collating sports data. They use their software and data store, powered by AI and machine learning systems, to create real-time digital connections across the sports ecosystem to back up the best in online sports betting. The company has the most up-to-date data at every level, from the teams on the playing field to the fans in their living rooms cheering the game on. GENI Sports supports the betting venues and makes it possible for them to support their customers. They did share mixed results for their second quarter earnings report back on August 9th, as they did have a wider than expected loss per share, but a slight beat on revenue. Despite that, though, they did increase their future outlook. They reported a Q2 loss per share of 9 cents, which was 6 cents wider than analysts had been anticipating. Revenue of $95 million did exceed analysts' expectations as well as their own guidance. Looking forward, they did raise their 2024 group revenue and adjusted EBITDA guidance to $510 to $85 million, respectively, and they reaffirmed their expectation to generate positive cash flow in 2024. They said they extended one of their key data rights agreements, expanded their technology footprint, and bolstered their product offering across the sports ecosystem. Following that earnings report, we did hear from one analyst at Macquarie who increased their price target. They said that with sports betting still in its infancy in North America, they see more momentum for the sector during the NFL season. GENI Sports is a direct benefactor of this momentum, positioning the company to outperform in the second half of the year. And it does seem that other analysts agree. GENI Sports currently has 8 analyst ratings and comes in as a unanimous strong buy. The average price target comes in at $9.50, implying an upside potential of 24.5% from current prices. Down below, looking at our most recent ratings, we have several at the high-end price target of $10, implying an upside of over 30%, and several at our low-end price target of $9, implying an upside of over 17%. Second on our list today is Flutter Entertainment. They trade under the ticker FLUT, currently priced at $219 per share. They've climbed about 23% in the past year, and in the last 6 months are fairly flat, up about 0.3%. Flutter Entertainment is a sports betting and gaming company that operates in the UK, Ireland, Australia, and the United States. They are the parent company of the world's biggest and most popular sports betting and iGaming brands, including FanDuel, Sky Betting and Gaming, Sportsbet, PokerStars, Paddy Power, Betfair, and more. FanDuel is their largest brand and the U.S. market leader in online sports betting, with a major and fast-growing share of the iGaming market. In their latest quarter, they had 14.3 million average monthly players, which was up 17% year over year. And they did come out with both an earnings and revenue beat for their second quarter on August 16th. They reported Q2 revenue of $3.76 billion, easily beating analyst expectations, and their earnings per share of $2.61 grew 56% year over year and also outpaced analyst estimates. They saw U.S. revenue grow 27%, and they also moved their U.S. primary listing to the New York Stock Exchange. And with the strong performance in their second quarter, the company also raised their future guidance. Just a few weeks ago, we did have an analyst at Morgan Stanley initiate coverage on the Flutter Entertainment stock with a buy. They said that Flutter has a compelling global long-term growth story and is the scale leader in online gambling, 3 times larger than its nearest peers by revenue. They said that the company has established leading positions in the US, UK, and other global markets, and believes a steep inflection of the US profitability is transforming the financial profile of the business, while the US primary listing is increasing liquidity. Flutter Entertainment is rated a strong buy with 15 current analyst ratings, coming in with 12 buys and 3 holds. And the average price target of $259 would imply an upside potential of over 18.5%. Looking at those ratings down below, our low-end price target is a hold here with a downside of 7%, while we have several targets on the high end up at $291 for an upside of 33%. And last but not least today is a company well known in this industry. We're looking at DraftKings. They trade under the ticker DKNG, currently priced at $35.76. Overall, in the past year, they are up 12.5%, but are in the red in the last 6 months, dropping 14%. DraftKings started out back in 2012 as a fantasy sports platform, but has evolved over the years and is now a leading gaming and digital sports entertainment company. They are the only U.S.-based vertically integrated sports betting operator, powering sports and gaming entertainment for over 50 operators across more than 15 regulated U.S. and global markets. Their products range across daily fantasy, regulated gaming, and digital media. They seamlessly connect their players to the action they want when they want, with a wide range of betting opportunities and a friction-free user experience so they can enjoy a tailored and unique betting app experience. DraftKings did come out with mixed results for their second quarter at the start of August with an earnings beat but revenue miss, but they did also come out with an inaugural share repurchase authorization. They reported Q2 earnings per share of 12 cents, which came in 13 cents better than analyst expectations. Revenue did grow 26% to $1.1 billion, but did miss by about $20 million. The company announced a $1 billion inaugural share repurchase authorization. Just last week, an analyst from Susquehanna increased their price target on the stock. They believe expectations are too low considering a more typical seasonal pattern where DraftKings underperforms FanDuel in the second quarter given FanDuel's stronger NBA product, but outperforms and gains share in the third quarter given the strength and depth of their football product offering. They see DraftKings trading levels have fully reflected off-season industry fears versus the favorable performance that the firm is expecting in the second half of this year. DraftKings has attracted 29 analyst ratings, coming in as a strong buy with 27 buys and just 2 holds. The average price target comes in at $49, implying an upside potential of about 37%. Looking at our ratings down below, we have quite a long list. We have to scroll back a ways to get our low end here at $32, which would imply a downside of 10.5%, and scrolling all the way back to the top for our high end price target of $60, implying an upside of over 67%. So that is a quick look at 3 strong buy stocks in the sports betting industry. Let me know in the comments which of these you'd place your money on. I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you always stick to your own investing plan. Thank you guys so much for watching. Have a fantastic day, and I'll see you back here next time.